A new pool of venture capital money. What will it mean for the Maryland economy? Joining us for this week's Smith Business Close-Up is Elana Fine, Director of Venture Investments at the Dingman Center for Entrepreneurship. Thank you so much for being with us.
Thanks, Jeff. Thanks for having me.
So the program we're talking about is called Invest Maryland. Maybe if you could tell us what it is and what it's going to do.
Yes, this Invest Maryland is an initiative put together by Governor O'Malley to increase investment in high-growth companies in the state of Maryland. And so this is going to be a partnership between the state and private venture funds to put $100 million into companies based here in Maryland. And so these are going to be companies that are in life sciences, high tech, and other high-growth industries, and is expected to create over 2,000 jobs in the state in companies that are hoping that will continue to grow and create highly skilled jobs.
From your position at the Dingman Center, you probably have a good view of what's happening in the entrepreneurial community, the venture capital world. How are things at the moment? I mean, are companies able to get funding? Are certain types of companies having a tougher time than others?
Yes, we have seen. I run an angel fund based out of the Dingman Center from regional angel investors that invest in companies around the region, Maryland and DC and Virginia.
And angel, we should say, is a relatively small investment.
Yes, usually up to $1 million in seed capital. And we are, I'd say in the last 6 months, have seen an uptick in investments in early stage companies. I think the good thing is that the costs, particularly for software IT companies, the costs to start a company and develop software have gone down considerably. So angel investors can make a number of, let's say, bets on small startup companies, and we have seen an increase in investment in those companies, particularly in, as you see, a lot of consumer web space, mobile applications, healthcare IT, and other hot sectors that you're seeing in a lot of the popular press about. I think that the key things, what we're seeing is you're seeing an uptick in the IPO market, particularly around technology companies, which always does increase the investor appetite when they know that there's going to be some sort of opportunity for an exit or liquidity event. And you're also seeing an uptick in M&A activity. There is cash on a lot of tech companies' balance sheets. So we are anticipating an increase in M&A activity over the next 18 months that also increases investor appetite. Obviously, there's other economic factors and instability that may inhibit how big that opportunity is going forward in the next 12 months. But we do anticipate an increase in investing compared to 18 months ago.
What do you think will determine whether this program is successful? In terms of how the money is allocated, what sort of companies get funded, and obviously how they do?
I think that's a good question. I think what will make it successful is the types of companies that are in the type and diversity of the companies that the fund invests in. I think that it needs to be very clear that this is, if the fund wants to return a venture capital like rate of return, you need to be looking at high growth companies that do have opportunity for some sort of exit, or to be able to be acquirers themselves and create larger businesses here in Maryland, which in this area we really suffered from companies here being sold and not being not continuing to be ongoing businesses here. But I think that has to be clear. Also, what the criteria is for that money needs to be clear, so that as people are starting to build their businesses, that they see this as a really credible source of financing. But also need to understand that there needs to be follow-on investment in these companies. So once a company gets money from the Invest Maryland program and the participating VCs, those companies also need to be introduced to the right other venture firms and other sources of follow-on capital so they can continue to grow.
All right, very good. Elana Fine joining us from the Smith School of Business. Thank you for your time.
Thanks, Jeff.